Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to the Cell Tower Pepsi, to American Tower's Coke, its Crown Castle, ticker symbol CCI. First, we'll rate the strength of Crown Castle's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt's at a 6. Jason couldn't even get there. He got a 5.5.
I was tempted to go with a whole number 5 here. This business should be like a 9. It really should. These sorts of assets should just generate cash flow, grow it a little bit every year, return a bunch of excess cash flow back to shareholders, as REITs should do. But what happens when management and the board get in the way? The CEO was fired in March. Company is still searching for a replacement, has a new CFO. He was on the board for a few years, so he's been around. Just sold off its fiber business a couple weeks before firing the CEO, took a big goodwill impairment. Do the math on those decisions. This, again, should be a 9. But management, largely driven by the board, was incentivized to not incentivized to create value, but to build an empire. Here we are.
Yeah, this is one of the rare times when like there's a company that something goes wrong and you just take a step back and you're like, how do you mess that up? Like, it wasn't like there were bad market conditions. Like the 5G rollout was going on. That's ideal for a company like Crown Castle. But I give it a 6. I mean, Crown Castle does provide critical infrastructure. It provides things that companies need. Cell towers, even though they're selling the business of small cell nodes and fiber networks, there's some competition. You mentioned American Tower, which much better execution, by the way. Naming your business Crown Castle International and making a conscious decision to not go international is that's questionable too. But generally poor strategy, as Jason mentioned, over the past few years. The management issues are concerning. We're going to dive into that more in a little bit. The revenue's declining. Not only was there generally poor management, but then Sprint and T-Mobile merged, and they pretty much had 4 big customers. And a lot of consolidation there is leading to revenue falling. They'll report revenue that says, like, our revenue would have been up 5% year over year, but we lost a lot of T-Mobile and Sprint customers. So their revenue, their funds from operations are declining. And the merger couldn't have come at a worse time with their management issues.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. This is looking a bit Simpson-ish. Matt's at a 3. Jason matches him with a 3.
Yeah, very much at dote levels of management here. You have to include the board with this. About half the board has been around for more than 5 years, including the chairman, who's been on the board for over 11 years. The company hasn't just been mismanaged. It has. But the board has failed to set the right strategy and the right incentives for management. If you look at management and you wonder, why are they doing the things they're doing? Go read the proxy statement and look at how they're incentivized. And that is a lot of what has happened. So the board has failed to do the right things. And a little over a year ago, it caved to Elliott Management, the activist investor fund, the activist investor, and it named Moskovitz its CEO, who they just fired after basically about a year.
Yeah, to be clear, my 3 is for the previous management because who's in charge? The 3 goes to the previous management and their issues. Like you said, their recent CEO lasted less than a year. They're on their 3rd CEO in 18 months,
and he's an interim CEO.
Yeah,
and he was just replaced the CFO like
right.
6 weeks ago.
The search for a permanent CEO is ongoing. So if you ask me once they find one, I might give you a different answer. But they're making some pretty big pivots in the business, like you said, the sale of the fiber business, for not having permanent leadership. So I give it a 3. There are serious management issues here.
If you had 3 spouses within 18 months, someone might question your dating strategies.
Yeah, someone might think that I'm the problem.
There you go. There you go. Questionable judgment, which would be a good band name, by the way.
Financials. 10 is a fortress. 1 is yikes. A little higher here. Matt's at a 6. Jason, you're at a 5.
Yeah, like I said it earlier, the asset base should be a cash cow, but it's just so leveraged, and those bad investments in other assets have resulted in a terribly bloated balance sheet. The debt to average ratio, the debt to assets ratio is way over 70%. And asset sales are going to help pay down debt and reduce the leverage. They're going to reduce incoming cash flow too. That's why the dividend was cut. And things may get worse before they get better. Matt has talked about the T-Mobile merger that now they're losing a customer to some degree. I don't trust management or the board, especially the board, frankly, to lead a turnarounds. Maybe we need another activist investor to get involved.
Yeah, usually Elliot's the one cleaning up stuff pretty well, right?
Yeah, I'm not. Elliot's gotten involved in Phillips 66, and I'm not happy with Elliot right now.
Oh, so maybe not. Maybe I'm being too fair to Elliot management.
Yeah. I said a 6. To be clear, I think the sale of the fiber business is the right move.
Absolutely.
Given what's going on right now, it's a positive step. I like this better as a pure play tower company. I kind of feel like they thought the 5G infrastructure expansion was going to be bigger than it was, and invested accordingly, and didn't really account for things like consolidation in the industry and the fact that you don't need as much infrastructure as we thought. The Sprint cancellations have hurt the business. The leverage bothers me a little bit, but on the other hand, I did give it a 6 because it does have critical infrastructure in its portfolio. The asset portfolio is great. In terms of like the towers, the tower portfolio is a solid portfolio of assets.
Right.
This isn't office real estate.
Matt, let's talk valuation. How well will Crown Castle stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
I said 5 to 10%, but there's a lot that could push it one way or the other. We don't know who's going to be in charge of the company in 6 months, let alone in 5 years. I did give it a 7 safety score. The valuation is really low right now, and I don't see much of a scenario where if minimally competent management takes over, where investors will lose money over a 5-year period from here. That's really where my safety score of 7 came from. But again, there is a lot that can go wrong one way or the other.
Yeah, Matt and I are perfectly aligned here with expected returns and safety score. As much as the business has been egregiously mismanaged, those core assets are still really good, nearly irreplaceable, and they generate plenty of cash flow. If they could just get something more competent than a ham sandwich running the show, the returns could be closer to the high end of that 10% range, or maybe even better from this valuation.
Let's move on to everyone's favorite topic. Well, I know there's going to be some now. Matt, is there a company in Crown Castle space that you like better?
Well, I mean, their direct space is them in American Tower, but if you were talking about infrastructure real estate, I would expand it to do Prologis. I believe right now they're the largest real estate company in the world. I think they retook that title from American Tower. Yep. They're a great infrastructure play. If you ever see those big Amazon warehouses, they own a lot of those. Very critical infrastructure, great management. They're still a founder-led REIT, which is very rare. And just a lot to like about the company, and their scale just gives them such a financial advantage, and they take advantage and don't mess it up. So they have a how can you mess it up business, and they don't mess it up.
So I'm putting on my thinking cap of, if I'm interested in Crown Castle, I like the idea of a turnaround, right? I'm looking for deep value on good assets and that turnaround. If I'm doing that, if I'm buying a beaten down REIT on expectations of a turnaround, I'm going to start with really high quality assets, better management, and more upside. And in that case, I think Rexford Industrial is really interesting. Ticker's REXR. It's an industrial REIT that's based in Southern California. So immediately all of that is like, okay, well, tariffs, all of the imports coming from China and Southeast Asia, that's getting blown up. It's not getting blown up, people. It's once we get on the other side of all of the madness with the trade war, those assets are going to be exceptionally valuable for decades to come. And I think that plays into investors' hands.
Quick thumbs up or thumbs down. You prefer American Tower to Crown Castle?
No, why buy either one? Yeah, so it's less worse, but the valuation is not. You don't have the better starting point from a valuation.
Yeah, as a value investor, I might go with Crown Castle out of the two if I had to pick one.
Got it. So, trying to be nice to someone, but nothing doing. All we get's a lukewarm. Yeah, I guess. Thanks to Jason and to Matt. They've given Crown Castle an overall score of just 5.3 out of 10. That makes our other scoreboard companies look better by comparison and shows you we're not just giving high scores here. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Truist. Till then, Fool on. Anyway, Crown Castle.
I see Jason's face already starting to turn red.
I'm getting turned, y'all.